Hey everyone, welcome back to 2025. Thanks for joining our first news trading session in 2025. And we're going to start with the theory and practice. Let's do a quick sound check first. If everything is coming through okay, let me know. Any issues, do let us know as well. What should be coming through okay. All right, my name is Vito Angelo, and welcome back to our news trading session for 2025. Huge developments in the market. Obviously, a lot to talk about in terms of how we can actually trade the news, and yeah, a lot of example to take apart. But yeah, we've got the NFP numbers tomorrow. We're going to be trading that live as well, and then the CPI number or the inflation number, which is going to be next Wednesday. We're also going to be trading that live. But just to begin, I think I like the schedule here like this. We talk about the theory first, and then you guys can follow through with the live trading session, which is going to follow tomorrow night, tomorrow morning, afternoon, depending where you're from. It'll be nighttime for me. But yeah, that'll be great. Okay, just a quick disclaimer, any opinion discussed in this webinar or linked to this presentation is provided as a general market commentary and does not constitute investment advice. News trading involves risk due to high volatility. Market reactions to news can be swift and unpredictable, which leads to higher trading risks and delays in order execution. So just be mindful of that when determining the volume of your transactions and consider all possible risk factors. All right. As per usual, there's going to be a code for participants here to double your deposit bonus. I'm not sure if the code is still working, but hopefully it still works. I'm just waiting for the new code to come in, but we will still be using some of the older codes from last year there. And the other thing is you should already have access to the private Telegram channel if you registered through the website or if you have attended our previous news trading sessions before. Okay, so this is the code. It's on Farm 2024. It kind of says that it expires on the 31st of December 2024, but I think it should still work. I'm still waiting for the new code, but yeah, if I can take a guess, it'll be non-farm 2025. So try those codes again, and if 2024 still works, please use that one. Keep the 2025 for next time. Okay. A little bit about myself. My name is Ranjaro, and I've been a full-time trader with over 20 years of experience, a professional trading coach, as well as a technical analyst since 2007. My expertise is in the Ichimoku Kinko Hyo technique, and I've also been invited as the guest speaker at Trading Investing Expo across Australia, where I'm based, investor in Singapore, as well as the ATAA and the APTA conferences, which is the Australian Technical Analysts Associations. Okay, so we want to talk about a few stuff here. I do want to talk about the advantages and disadvantages of news trading. What are going to be the most profitable news for trading? One of them is obviously tomorrow, which is the non-farm payroll, and the unemployment rate, which is the labor data. And then we want to talk about the three main phases of price movement that we should identify before actually trading the news, because it has a lot of importance, and also in terms of how we read the sentiment in the market, what are traders anticipating, how it could actually play out. Are we in a position where we anticipate a breakout? Are we in a position where we might actually see a little bit of a reversal? That sort of stuff. So we want to talk about the three main phases of price movement. Some couple of general rules for news trading. And I want to talk about the pending orders that we will be using for our news trading sessions. Okay, so we'll take a look at some of the examples there. Okay, so let's talk about the advantages first for news trading. And I think what we like about news trading is that all the necessary information can actually be found in the economic calendar. So there's actually no need to delve deeply into technical and fundamental analysis. Now, one thing I need to point out here, news trading is not fundamental analysis. So make sure you understand the difference between the two, because I think there's a lot of mix up in terms of, news is going to get released. I talk about news releases on the weekly outlooks, and you guys probably say, I don't understand about fundamental analysis and whatnot. I'm not able to trade the news. I don't think that's actually the case. The news trading part that we're doing every month, that's actually separate from fundamental analysis. So fundamental analysis, let me just break this down a little bit just to clear things out. So fundamental analysis is basically understanding how the macros are. Okay, so if you understand what's driving the economy. That's fundamental analysis, right? So you go out there, maybe you learn economics in the uni or at school. You're probably going to catch along a lot better. But maybe if you didn't come from the finance background, if you don't understand econ, are you able to learn fundamental analysis? And the answer to that is yes, but that's not really what news trading is. News trading, it's basically using all these fundamental events, right? Data that's actually being released, but trading the reactions of the market when these events are announced, okay? So if you understand the whole picture, that's fundamental analysis. But news trading, we basically just want to take advantage of that short-term volatility when market reacts to a certain news being released. That is news trading. And it has a separate strategy, separate to fundamental analysis, okay? Now, if you're wondering where can we find that economic calendar, you can actually go to Octa's website, and you can actually find trading calendars there, economic calendars there, or you can use all the free resources out there. Some people like to use investing.com. People like me, we like to use Trading Economics. I think there's a lot more details into it. Or you can use Forex Factory. I think that was one of the oldest site where we actually find these news releases. Now, was there an advantage in the past in terms of paying for data and whatnot? I think there used to be an advantage, but I think nowadays, the free resources themselves are pretty much on time in terms of the release. We get the numbers pretty much instantaneously as well. So yeah, I think it's pretty much about the same thing. And with the news trading session, it's really more in terms of when this data is actually going to be released and are you prepared for it, okay? All right. Second thing, the advantage to this is that events in calendars are actually ranked in order of importance, which helps in making adequate decisions. Not all news are going to be created equal. Some of them move the market significantly. Sometimes it doesn't move the market at all. Certain news probably doesn't have an impact. For example, if you're not trading oil, right, there's no point for you waiting for your oil stock supply distilleries number if you're not trading oil, because it doesn't have an impact, or it doesn't have a huge impact into, let's say, the Euro USD or the Pound USD, right? It probably impacts oil market a lot more, okay? So if you are trading the Euro versus the US, for example, then you want to be focused on looking at data from the Eurozone as well as the US dollar, the US economy. There's no point if you're trading the Euro and you're looking in the morning during Australian session and you look at the Australian inflation number or New Zealand inflation number, for example, it doesn't have an impact onto the Euro, okay? So make sure you're looking at the right thing because, again, news releases, they're important, but not all of this data are actually key market movers in the market. And it's always good to find out which one moves the market, because what we are aiming to get is the short-term volatility that's created by that news release, okay? Now, publication of statistical reports noticeably increases volatility, allowing traders to potentially earn significant profits. And the term here that we use is that we are traders. We are not investors. And traders look for this volatility. The reason for that is if there's a lot of volatility, then the market moves very quickly. So you don't actually have to stay very long in that trade. If you open a position, if there's a huge volatility, you might be out within the first 1 minute or maybe 5 minutes, right? Typically, ever since we run this news trading sessions here where we do our live trades, I actually like to get out as quickly as I can. And I think the records that we have was 58 seconds. That's how long we stayed in the trade. There's a lot of volatility. We opened a position within 58 seconds. We're already out with profit. Simple as that. Okay, that's basically what we are looking for, and that's the best case scenario. We don't really like to open a position and then the market kind of just gets stuck and it doesn't go anywhere. That could be problematic because the short-term volatility, it might not be enough to kind of influence the long-term directions of the market. So we really want to get in and get out as quickly as we can, okay? Now, the other thing that I like about niche trading is the simplicity of the strategy. You basically need to know how to open and close orders without the need to learn any complex formulas. In fact, with niche trading that we typically do every month, it's really just a simple breakout scenario, right? We like to gauge the market, and I'm going to show you how we actually do that later today in the session. And once you figure that out, it's actually pretty simple. As long as you know how to order, how to create those pending orders, you know how to open and close the positions, right? That's all you need. Simple as that. Now, the other thing that I like about niche trading is minimal time expenditures on trading, because you know exactly when to access the trading platform and what actions to take. Moreover, the trading process itself can be completed in just a few minutes, as I just mentioned before. You know, we want to open a position, get in, get out as quickly as we can. Now, how is this advantageous? One of the main reasons we trade, or a lot of people trade, it's to not be in front of a computer for a very long time. If you do that, then you're actually full-time trading the market, and it becomes more like a job, right? Some people like to just turn on their platform, turn on the computer, and log into their platforms on your phones. At the time of news release, open a quick trade, get in, get out as quickly as we can, right? For example, tomorrow, you don't actually have to just sit around in front of your computer looking at the charts there for the whole day. All you need to do is be prepared about half an hour before the news is actually going to be released tomorrow. And that's it. You know, that's minimal time expenditure for maximum gains on that one particular market movement for tomorrow. So we want to look at that, and I think that's an advantage here because we're not wasting our time looking at a computer for a long period of time. You know, go in there, trade, get out, you know, do something else, right? Enjoy your weekend, whatever. Okay, have a good night on Friday nights. Okay, now all good, all things good there. The disadvantage here is that the market situation doesn't always develop as predicted by logical thinking and common sense. Again, if we think about logical thinking and common sense, and I know it's actually one of the traits that a lot of traders are actually missing. So, okay, so a lot of short-term traders actually don't really trade with logical thinking. But if we understand fundamental analysis, you know, everything has to go with a certain flow. But at times when news is actually being released, bad news can actually be good for the economy. Good news can actually be bad for a certain in certain situation. For example, tomorrow, if we take a look at the data tomorrow, and you're looking at two different things. For example, if you're looking at the Forex market, all right, if the data tomorrow is bad, then it's actually going to weaken the US dollar. It will push the euro and the pound stronger, right? Because it's bad for the US economy. Now, if we think that's bad for the US economy and you're also looking at the US indices tomorrow, then the assumption would be if it's bad for the economy, the stock should go down, right? But in the case for tomorrow's data, for example, if the data is bad, it could actually be a boost for the stock market because right now, everyone is anticipating for more cuts from the FOMC if the data is bad. And if that's the case, that could actually drive risk sentiments to the positive side. And that would actually push the equity market up. That could push the Nasdaq up. That could push the US 30, for example, the Dow Jones Industrial Average. I could also have an impact on Bitcoins, for example, right? So it might be bad news, but it could actually be a boost for a lot of different instruments. So sometimes it just doesn't go in the right direction depending on the context itself. Now, obviously, understanding fundamental analysis could help you with this scenario because if you understand what the market is expecting, then it becomes logical. But to a lot of new traders, it just doesn't make sense sometimes. So just be mindful of that. It could happen, okay? Now, not all news can cause significant market reaction. For example, we're anticipating the inflation number next week. Will it have an impact as big as the NFP numbers tomorrow? Probably not, Okay, they're all high impact news, but I think the NFP number tomorrow, it's probably going to move the market a lot more this month rather than the inflation numbers. Okay, now we also have several data, for example, like the weekly jobless claims, right? Weekly jobless claims, for today, for yesterday, I think it was actually released yesterday instead of today because the U.S. market is actually going to be closed today. Several news is still going to be released, like the Challenger job cuts is still going to be released today. But like this week during Labor Data week, does the weekly unemployment claims have a huge impact? Probably not, right? Because we're waiting for the much bigger data there, which is the non-farm payroll and the unemployment rate. But every other week, the weekly unemployment claims actually have a huge impact into the market. So not all news, even though they're labeled as high impact, could actually have a huge market reaction depending on the time they are actually released and whether it actually is useful for whatever you're trading. So just keep that in mind, okay? So, and the other thing is, if you're not able to accurately anticipate the market direction or analyze the situation incorrectly, you may experience significant losses because of that huge short-term volatility. If you get it right, then yeah, it'll be good for you. You'll be out of the trade with profits, or you could actually be out of the trade very quickly with losses. So this is the reason why we put on the disclaimer that you need to understand what you're doing here, okay? News trading causes a huge volatility in the market. And if you open up with a wrong lot size, it could easily destroy you, or it could easily turn you profitable really quickly. So just make sure you know what you're doing. So it's really the other side of the coin, right? One of them is if you get it right, then it's going to be advantageous for you because you could have a huge significant gain in a short period of time. But if you get it wrong, obviously, yeah, it could actually blow up your account. And, I've mentored a lot of traders and I've seen a lot of new traders, don't really understand what NFP is, and they don't understand how to trade NFP. And maybe the salesperson just told them, hey, you should be trading the NFP number, you could get rich really quickly and stuff like that. Well, maybe some other friends are doing that. But I'm just here to warn you, if you get it wrong, or if you don't know what you're doing, I would say stay away. Like for example, if you want to trade the NFP number, you never traded in the NFP, you're not sure what you're doing, you can join our session tomorrow, see what's going on there, look at how we trade. If you like it, then jump in next month, then probably do your trade there. So yeah, have a look at it if you want to, or if you have previous experience, then by all means, join us for our live trading tomorrow and have fun with it, right? Okay. All right, let me see the chat here. Good day, Mr. Vito. When will you do a webinar on Ichimoku Kinko Hyo trading strategies in English? I believe I've done that before, right? It should be in the library. I think I've done that about 2 years ago, maybe more than that. I think it was about 2 years ago. But yeah, go to the channel. It's I think you search Japanese charting techniques. I think that's what we titled the session. But you can just look it up, Japanese charting techniques, and we did those sessions before. But yeah, hopefully in 2025 we'll get, I'll get the opportunity to do another sessions with you guys in terms of educational content, and maybe yeah, we will delve deeper into Ichimoku. I think the Ichimoku Kinko Hyo techniques that I've done in English for this channel, it's really just the basic. We've actually done more in depth on the Ichimoku Kinko Hyo in other languages. But yeah, hopefully we get the chance to, hopefully I get the chance to do that for you guys this year. Okay. Oh, love Octa. Thanks for such a nice platform, such valuable webinars. And yes, genuine brokers never approach individual in person. You approach the broker. That's correct. I think that's the way we should do it. And if you're comfortable, I think that's the way we go. All right. Thanks for the nice feedback, guys. Really appreciate it. Okay. So yeah, pretty clear on advantages and disadvantages of niche trading. Easy. All right. Most profitable niche for trading. And basically, I want to talk about two different categories for trading here. Both sides of them can be profitable, and but we want to talk about the hot unexpected news and the periodic news, right? Hot news, a lot of hot news this week. If you've not been following what's going on in the financial market, yesterday Trump has come out and miles around about a potential for calling the U.S. economy into an economic crisis so that he can slap more tariffs on the other countries, right? Is that hot, unexpected news? Yes, because it causes a lot of confusion in the market. It turns risk appetite into something, it sours risk appetite, it turns the sentiment negative. That was unexpected, right? And then a few days before, he said unexpected things. He wants to buy Greenland. He wants to take over Panama Canal. A lot of this stuff. He wants to name Gulf of Mexico into Gulf of America. Very interesting stuff coming up from Trump. But yeah, those are unexpected news, right? And we got the situation in the Middle East intensifying as well. There's a lot of concern right now in terms, with the situation, especially with Israel and Syria right now. And I believe Turkey is also making a move right now. It just gets jumbled up. And we know the situation in Ukraine, Russia is getting worse right now again in the past month. So all of this are what we would say unexpected news, right? We have no clue what's going on. And then if you're following the stock market, and by the way, if you didn't know yet, you can actually trade the stock market with Octa. And Jensen Huang, CEO for NVIDIA, actually said something about 2 days ago in terms of the development for quantum computing and in terms of the practical use in quantum computing. One comment from him was basically this, saying that practical use for quantum computing, we probably wouldn't see it until 15 to 30 years. That itself is enough to cause one company's stock market to drop by 60%. And it was Rigetti Computing, by the way, if you guys want to find out. And obviously it adds into the bearish sentiment in the market. It turns everything into a bearish movement. That's why you see the fall in the stock market yesterday. If you're looking at the US 30, Dow Jones Industrial Average, those are affected. These are unexpected news. We have no clue who is going to say what, when are things going to happen. These are unexpected news, okay? But can they be market moving enough to cause high short-term volatility in the market? Yes, they could, right? So unexpected news, if you pick them up quickly, you might actually be able to trade off this unexpected news. Maybe in the future, one day, we could do one special session to just talk about this and actually anticipate all this. Yeah, are they something that we can actually trade off? Yes, sure thing, right? But the normal one that we want to trade on are the periodic news because we know when they're actually going to be released, okay? So tomorrow's NFP number, we already have the consensus. I've been telling you that since Monday on the weekly outlook. I know when they're actually going to be released, and we can actually strategize around this release, obviously a week before that if you have those information. So yeah, periodic news, obviously central bank meetings, right? We know when they're happening. The FOMC cut last month, interest rate cut, right? This is something that's probably fallen into that category where it doesn't click. FOMC did an interest rate cut. It should actually be it should actually be bad for the US dollar. But if we know what happened on December last month, FOMC cuts interest rate, the US dollar strengthens for the rest of the month, right? Is that logical? See, it doesn't click, right? But because we know there was a little bit of an anticipation there that if they cut and then they say something in a way that they're not going to be cutting more in 2025, that could actually be positive for the US dollar. So these are the kind of things that comes into play with fundamental analysis. But for news trading, it could actually have the opposite effect, right? So yeah, sometimes it just doesn't click. And a situation like this, even for periodic news, and this is the reason why we have our weekly outlook. So we can provide you guidance in terms of what to anticipate. How do we actually read the news? How do we anticipate the consensus and whatnot? And this is the reason why we have our live trading session, right? All right, quarterly GDP reports, inflation indices next week. Indices of business activity, ISM manufacturing, PMI services, PMI, unemployment data, those are going to be what we call the periodic news. These are scheduled news, and we can strategize around their releases. Not really a surprise, especially with some of the data here, like inflation numbers, unemployment rate, NFP numbers. They're already scheduled by the Bureau of Labor Statistics right now. For the rest of 2025, you already have the calendar for the rest of the year. I'm well prepared for 2025, right? No surprises there. Okay, so okay, a couple of questions. We'll answer that at the end of the session. Please stick through this while we go through some of the stuff here. All right, 3 main phases of price movement. All right, you need to understand the 3 main phases of price movement. Number 1, we want to look at the sideways market, and this would be the accumulation, right? A lot of new traders thought, oh, sideways market is a very confusing session. It's really not a good time to jump into the market. I can show you right now with the market right now, especially the stock market, there's a little bit of an accumulation going on right now. The most informed and forward-thinking traders insiders actually enter here. The reason why we call it accumulation is these are actually terms that's derived from the stock market, but it'll make sense in a minute, okay? With the stock market, typically there's actually lower liquidity. What do we mean by lower liquidity? There are actually limited amount of stocks that we can buy, okay? So, for example, if I want to buy 1 million stocks on NVIDIA right now, or Apple, right? If I want to buy 1 million Apple stocks, I'm not able to click 1 million and I'll get that order in one go, right? In reality, at any given moment, because we don't have that liquidity, unless there's another person that wants to let go of their shares, that 1 million shares that I have, I'm not going to be able to fill my 1 million shares position. This is why we split it up. And, we might buy 500 today, we might buy 5,000 tomorrow. We might do that for maybe 2-3 months. Those are accumulating, right? Maybe we'll buy it about $5 up, $5 down, but we are accumulating positions. And this is the reason why it looks like it's in a sideways market condition, because some people want to sell. The top players, they understand what's going on, they want to buy, right? Every time someone let go of their position, that's when they buy into the position, they start to accumulate their positions. And this is the reason why we say it's accumulation, okay? Now, once a lot of these shares are accumulated, or people accumulated positions, maybe there is a technical breakout. There are certain patterns, technical strategies that tells you, all right, hey, it's breaking out, let's just jump in here, we'll buy, and then the market start moving. Those are your participation stage, right? This is where, if you have a good knowledge of technical analysis, you'll enter the market during the participation phase, right? Traders get in during the participation phase. Investors get in during accumulation phase. Get it? Right? Simple. So investors are going to start looking at, hey, I want to buy Apple. I want to buy Apple. Worst gets around the market, right? That's where traders are going to start looking at that and say, hey, this guy has been collecting Apple. Maybe we should pay closer attention to Apple. Maybe if price breaks a certain level, that could be reason enough for us to buy Apple as well. That's participation. A lot more people are now buying that. The market starts moving up. It starts an uptrend. Then all of a sudden, everyone else finds out that, oh, Apple is going to maybe finally develop a car, right? And it's finally on sale next week, right? And everyone else is like, oh yeah, it's time to buy Apple now. Okay, see what's happening here? A lot more traders are going to come into the market, push that in one direction, and then we see a very strong rally to the upside. But we call that distribution, right? Public enters here because they're receiving outdated information. Remember that investors, or the people that are accumulating their positions, the big traders, are actually having their positions down below when everyone wants to get rid of their positions, right? When everyone is looking at that and say, oh, it's a sideways market, I'm not going to be able to trade a sideways market, people are actually buying their positions. Participation phase, right? Maybe these people that jump onto the distribution are the publics. Maybe those people don't have the knowledge, the technical knowledge, to look at the chart patterns, to look at breakouts, so they don't know what's going on. But eventually word will get out, but those are outdated information. Now, just like in accumulation, those investors with a lot of stocks, if they want to sell their stocks, they're not able to just say, hey, I want to get rid of 1,000,000 shares in Apple in an instant like that. They're not able to do that. So every time someone else wants to buy that, go with the position, it's actually part of the distribution. So every time you see the market rallying up really quickly, what happens, right? A lot of new traders buy in at the very top. Once they thought, oh, it's a bull market, they buy in, the market reverse, they lose their account, right? It's true, right? If you look at what happened, especially when you were new and you experience losses, typically that's what happens, right? Market goes in one direction really quickly, you jump in, and then it reverses on you, right? It's very common. I think a lot of people actually experience that. But if we understand the phases, we don't want to get in at that phase because it's distribution. People are actually getting rid of the positions. They are looking for new traders to take over their positions, but they're actually going to get rid of all of their stocks, for example, right? So it could actually cause a market to reverse. And this is the reason why we say in the outlook, if there is a potential for profit taking at a certain price level, expect a reversal. Because when you take your profit, if you buy a position, right? Let's say you buy Euro USD, for example, and then it goes up really quickly, the euro strengthens, and then when you get out, what do you do with your buy position? You're actually selling your positions. And a lot of people are actually taking profits at the same level. Then there's going to be a lot of that sell positions, right? There's going to be a lot of that selling that's happening that could then turn the market around. This is why we say, when we are approaching profit-taking level, it is actually a level where we might actually anticipate a little bit of a sell-off. Okay, so just keep that in mind. Okay. Okay, so a couple of rules before we go on to the pending orders and explain to you what's going on. I might answer a couple of questions as well before we go on to the theory part. So general rules for niche trading is that you want to study the market and analyze the dynamics of a currency pair. For example, the dollar yen, euro yen, sterling yen really are trend following instruments, right? The Aussie, for example, gets stuck in the sideways market a lot more. Euro USD has less volatility and the pound USD, all this kind of stuff. You need to understand the dynamics of whatever you're trading, okay? All right, assess the reaction of that currency pair or instruments to the latest news. Prepare for trading by marking relevant levels on the chart. We do that before the news is released, right? Decide on your trading tactics. When are you going to be opening the position? When are you exiting and whatnot? Choose appropriate trading time frame. If you're trading the news, we go with the 15 minutes max. Some traders go with the 1 minute or the 5 minutes. Determine the maximum risk for each order and consider using stop losses or maybe trading stop loss if you want to know how to use them. Or if you know how to use them, feel free to use those trading stops, okay? And decide in terms of the deal, whether it'll actually be a quick one or is it going to be a long-term trade. To me, every news releases, I want to get in and out as quickly as I can, okay? All right. These are going to be the 4 types of pending orders that you need to understand. It might take you some time to understand this, and my suggestion is if you can screenshot this, print it out, stick it to the wall. Every time you trade, at least you have a cheat sheet. Because at the very beginning when I started trading, it actually took me about a year to get used to this pending orders, without having to pause for a little bit and start thinking, okay, which one is which, okay? Now, let's talk about the stop orders first. Now, the difference is basically, if you take a look at this, you basically have the stop orders and you have the limit orders. So let's talk about the stop orders first. So buy stops are order placed above the current market price and you anticipate price to touch that level and continue to go up, i.e. this is a break above the resistance kind of scenario. So if there's a resistance up top and you think that news release is going to push that currency up and then break that resistance, if it's a key technical level, for example, If your strategy says, okay, if it breaks that resistance, I need to go long, I need to buy into that instrument, then you want to use a buy stop, okay? If you look at the sell stop, it's the opposite. If you're looking at the support there and price is putting a lot of pressure on the support there, and if that news is released, it should break that and continue to drop down really quickly, then you want to use the sell stop, okay? Why do we use the buy stop and the sell stop? Why didn't we just, okay, if I think that's going to go up, why didn't I just buy now? Maybe your strategy says it requires for price to break a certain level, but you might actually not be in front of the computer, or you need to monitor a lot of instruments. That's where you use the stop orders, right? Because if you place your stop orders, you can move on to the next chart, place another stop orders on different instruments, and you don't actually have to manually click on, for example, 10 instruments or 10 pairs at the time for release, because that's not humanly possible. It's the reason why we use stop orders for news releases, because everything happens really quickly. Okay, and sometimes we're not even around the computer, for example. If you place the stop orders, it will fill the order even though your computer is shut off, you're not logged into your account. But if your order is in the account, the broker will still trigger that account, will trigger that trade for you, okay? Now, the other type of orders are what we call the limit orders, okay? So if we expect stop orders to break support and resistance, limit orders are used when we expect those support or resistance to be respected. So we think there's a little bit of a resistance up top, and I think price could fail up there. Then we want to place a sell limit because we want to wait for price to go up, hit that resistance and fail, and we want to open where it actually fails at resistance with the sell limit, okay? So sell limits are basically order placed above the current market price, where in a case you anticipate price to go up there, hit it, and then reverse down, right? That's sell limit. The buy limit is the opposite. If you think a support is going to be strong enough, you think that price, once it touches the support, could bounce up, then you use the buy limit, okay? So very simple. You basically have two different type of orders, a stop order and a limit order. So stop orders, if you want to see a breakthrough, those are going to be your stop orders, okay? Now limit orders are, again, if you anticipate resistance or support to hold, then you want to use the limit orders, okay? So let's take a look at the buy stop and sell stop strategies. This is what we call the straddle. This is the meat for our news trading session. This is the strategy that we use for our NFP release. We use this for CPI release because during these releases, what we anticipate is the short-term volatility is going to be so strong, it should be able to break a certain range in the market. And for that to happen, we need the market to be in a consolidation phase, okay? We need the market to be in that accumulation phase. We need the market to move in a sideways market where we can actually box the price there, and that's what we call the corridor of volatility. Once we identify that the market in this example here is in a sideways market condition, we want to look at and we want to start labeling where the corridor of volatility is, and then we want to place our stop orders above or below that range there, okay? Give me 1 second. Okay, so those are going to be a corridor of volatility, and this is basically what we need to identify. And there are reasons why sometimes I'm not able to trade or place a buy stop or sell stop during our news trading session, and this is actually pretty true the past 3 months, okay? For the past 3 months, there's actually not a lot of selection there because market already started moving before the news is released. The best case scenario to trade news releases is where everyone is just waiting for that news to be released before placing a trade, okay? So we need to see this corridor of volatility. Once we place the buy stop and the sell stop, that's it. Once one of these are triggered, for example, if the market hits the buy stop, you need to cancel the sell stop, okay? This is basically what happens here. So the buy trade is activated when price breaks out, touches your buy stop, you need to cancel the other order, okay? We go in with two orders, the buy stop and the sell stop. Once one of them are hit, we cancel the other one, because if we don't cancel the other one, then market could actually whipsaw us and you might actually get hedged. We don't want that. Okay, you'll be hedged with a loss if that happens. Okay, so this one here, it breaks to the upside, activated the buy orders, right? You're in a long position. You can adjust your stop losses. Just make sure you cancel the other order. And the good thing with this one here, especially with news releases, because of how volatile it is, you know, how quickly it moves, you can actually start moving your stop loss to break even really quickly there. Okay, and the ideal scenario is, because we don't know some of the stuff here, sentiments can change within seconds here. Okay, you always want to protect your position as fast as you can. You want to move your stop loss to a lossless zone, or basically moving your stop loss to break even. If the market reverses, you're not actually losing any money. And I think this is a good idea, because I think there's a lot of choppiness in the market as well, right? So ideally, if you want to minimize your risk during news releases, if there's any given chance there's enough distance between your entry and the current price, if you're able to secure that gap, move your stop loss to break even or get off the position, right? I mean, there's a huge spike here, you know, it's about 40-50 pips spikes in this example here. You can get out with 40-50 pips, or if you're greedy, you want to go for 200 pips, just make sure you move your stop loss to break even, just in case if it turns around, you're not out with any losses. Okay, I think that's one way to tackle this. Okay, so let me give you an example. All right, onto what we can look at here. I think there's a couple of scenarios here. For example, the pound USD, it has been stuck for the past 4 or 5 hours. I think we had a significant drop on the pound USD here, pretty significantly. And you know, there hasn't been any fundamental news or anything like that. And I know there's not going to be any news here, but let me just give you an example here. What does the combination of both order type mean? It's found identify buy stop limit order, sell stop limit order. Buy stop limit order, sell stop limit order. I'm pretty sure there's no combination of that. Here, let me give you an example. It's going to be the same thing on MT. I'm actually using MT5 for this one here. So yeah, I can go trading. All right, so sell limit, buy limit. I'm just going to click new order here. Your type is going to be pending orders, right? You got buy limit, sell limit. You got buy stop, sell stop. Yeah, sure. That's buy stop limit here. I think buy stop limit here is basically putting your putting your orders, but with a stop loss as well. I think that could be the buy stop limit. That's basically it, right? But we want to focus on this 4 here, and today we want to focus on this 4: buy limits, sell limits, buy stop, and the sell stop. Okay, so those are going to be the pending orders, but there's actually going to be an easier way. I want to show you first the corridor of volatility that we have here. Can we identify a corridor of volatility here? I think we might actually get a few. If you go into a small time frame, you can actually look at a corridor of volatility where market is actually stuck here like so, right? Now, assuming the next 15 minutes or half an hour, there's going to be a event that's actually going to be released. How do we cage this? What do we want to do, right? Even right now, if you want to trade intraday, can we use the strategy? I think we can use the strategy here. As long as you have that corridor of volatility, I think it would actually apply. It just is more efficient when there's actually a catalyst to move the market a little bit more. So there's a lot more or stronger volume and volatility. We want to wait for news releases, right? Doesn't mean that you can't actually use as part of your trading strategy. A lot of traders do use this as part of their trading strategy. Okay, so is there a corridor of volatility here? I think there's actually a level to watch out for, which is 1.23, right? That's a psychological price level. At least for the resistance part, we know what's going on there. Support-wise, there's actually 1.2250, right? That would actually be the corridor of volatility that we have here on the pound USD. So what we want to do is, if we identify this, I want to place a buy stop above this corridor of volatility. Maybe I'll place it at 1.2325, and at the same time, I want to place it at 1.2250, 1.2235 or maybe 1.2225, just below this corridor of volatility. On the assumption that when the news is released, it could actually break like that and take the market up, or it could go down and take your sell orders down. Okay, so that's basically the logic behind this, and that's basically how we want to place orders like this. If, for example, you're looking at a market like this is on the dollar Japanese yen, right? The market is already moving strongly in one direction like that. There is no corridor of volatility. I'm not able to gauge the dollar yen in this case here because the market is already starting to trend down, right? You can see very clearly that this is actually not in a sideways market condition. This is actually a little bit more in a channel to the downside, right? You can see where it's going. So this is not applicable. I'm not able to look at this and say, oh, let's do a sell stop here. Let's do a buy stop there. It's not going to work. Why? Because we don't have the corridor of volatility. So this strategy wouldn't work like that. And if there is volatility in the market, it still wouldn't work that way as well because we're not in a small range. We're anticipating that pressure cooking effect there. We want to expect a little bit of an explosion in the market. If we don't have that corridor of volatility, we're not able to trigger that. Okay. So we want to look at scenarios like the pound USD and the euro USD. Even for today, for right now, I think this is actually still good. I think we identify corridor volatility that we can actually use today for the pound USD. Euro USD, is there a corridor of volatility for the Euro USD? I think there is a corridor of volatility for the Euro USD as well. We just need to fine tune it, but you can see how the market is actually going flat here. That's your corridor of volatility, right? So if you identify a situation like this, then you're actually able to use the buy stop order and the sell stop order. Aussie USD, you're not able to do that. This is not really moving in a sideways market. New Zealand USD also not moving in a sideways market. It's actually pushing down. You can see that if I go into the 15-minute time frame, you can see where it's pushing down. It's not really flat to the side. Gold, for example, is already trending up. You can see how sharp that the move is. So you're not able to kind of cage this and say, oh, there's a corridor of volatility. We don't have that. The market is already moving in one direction. So every time you see the market being flat, move in a sideways market condition, that's when you can actually apply the buy stop and the sell stop orders, okay, especially before news releases, okay? Okay, so are we clear on this? I'll look at the questions if you have any questions, but I'll try to answer that for you. Okay, try several strategies, but still now I lose 10K blow up. But what is your advice? My advice is you make sure you understand what you're doing. I think that would actually be the best advice. I think Herman was just get rid of free videos that will save you in the future. You can join Octa FX webinar. I think that's a really good advice. Stick to one strategy and master it over time? Yes. I think the best advice that I can give you is figure out what it is that you're looking at. If you're trading gold, for example, are you sure you understand how gold move? I think a lot of new traders nowadays, ever since COVID happens, they thought gold goes up. It's really simple. A lot of crypto traders jump into the Bitcoin fund. They have zero idea what are those things that they're investing. They don't know what actually moves those. I think the best way is to actually understand what you're actually investing or trading. I think that would be number one. Number two would be, I think watching the videos in Octa FX channel, I think that would actually help a lot. We push out a lot of educational content. I would say, absorb as much as you can. There's a lot of strategies that's already been shared, a lot of indicators that you can actually learn from. Pick the ones that you like, pick the ones that you can relate to. Those are going to be, I think the best advice for me. And I think the last one is that you need to manage your risk. If you understand your risks, then I think it's good. Okay. Which time is best for trading depends on what type of trade you do. That is correct. If you're an intraday trader, are you trading the Euro USD or the Pound USD? If you're trading the Pound USD and the Euro USD, then trade during the UK Open. It's logical, right? If you're trading the stock market, obviously trade during US Open because that's when Wall Street is open. That's when the stock market is actually open, right? Don't trade New Zealand USD, For example, during the European session, they don't move a lot. If you want to trade the Australian dollar, trade them late American session or early Asian session, okay? That's simple logic, okay? For me, I stopped using all the fancy indicators, just focus on price action, yes, market structure, and candlestick patterns, which we have already covered before, and I think I actually did a session on smart money concepts. It does cover some of the market structures idea and also some of the price actions. You can find that on the channel as well. So a lot of this stuff that, that's recommended here, we've already done that. I think there's a lot of videos on the channel that you can actually find out. There's actually a huge playlist that we have done for educations, right? What is the right time frame to choose your buy so to confirm your analysis to execute your trade? Okay, let me ask you this question again. Do you want to trade a swing trade or do you want to trade an intraday trade? If you want to trade an intraday trade, then look at the 5 minutes time frame, 15 minutes time frame. If you're going to be looking at a swing trade, then look at time frame above an hour. For swing trades, typically we look at the daily trends, okay? All right, we got sidetracked there a bit, so I think we might do the Q&A session now. I think we have already done the Q&A session, but let's get back into this because there's still an example on the limit orders, and I want to show you that very quickly. Okay, when are we going to be using the limit order? A limit order, again, if we're looking at anticipating a resistance to hold or a support to hold, that's where we want to sell a limit. And in this example here, we got a little bit of an order block building up top, right? So we anticipate a little bit of resistance, but I don't really want to buy for price to go up there because I don't want to go against the trend, right? I want to see price go up, test that resistance, and if it fails, I want it to go down. That's why we do the sell limit. The reason why we do that, if you take a look at the stop loss, it's actually really small. And this is the advantage here, is that if you use the limit order strategy and we look at the price action here and market structure and order blocks and whatnot, which we have already covered before, you're placing your position at a discount. You're actually minimizing your risk as much as possible because you're placing your trade near the support or resistance, right? So typically with this kind of strategy here, you are going against the trend. The logical way is that you're going against the trend, but if you understand the characteristics of price action, you're actually minimizing your risk there. Sure, the probability is that it might hit your sell position and continue to go up and hit your stop loss. It's fine because the risk is actually going to be small. That's your counter offer here, okay? So the limit strategy here, if you understand your technical analysis, this is a very powerful tool. But if you don't understand technical analysis, just be mindful and be very careful with the limit strategy, especially during these releases, because it's going to be useless if you don't know what to look out for. Simple as that. Okay? But if you know how to utilize this is actually a very powerful strategy. Okay? Because if you take a look at the risk-reward ratio, it's actually typically more than 1 to 2, 1 to 3, because you're placing it near support or resistance. Okay? All right. So I want to show you one quick example here on where we might potentially place a limit order. So let's take a look at, maybe we'll take the stock market here, okay? So I think we got a little bit of a floor building up here for the stock market, all right, around here. If we cage that, we're probably going to be looking at around this area here, okay? So we look at this and say, okay, can we do a limit order? I think so, all right. If price goes down to maybe about 21,000 on the NASDAQ, we could potentially create a buy limit there, okay? So let me just show trade levels, there we go. All right, we might create a buy limit there. I can adjust this, I can do the stop loss and whatnot. Maybe I'll want to raise 2,500, maybe 500 points. I want to take my profit at 22,000, all right, I can do that. We look at that and say, okay, maybe I'll move my stop loss here. You see the risk-reward ratio here is actually a lot better, right? So these are the kind of limit orders. So we're basically looking at maybe price could come back down a little bit, okay? And then from there, it could bounce back up there. So these are when we actually use the limit orders, right? Maybe I'll just zoom in for you. Okay, so we could use the limit orders like that. Okay. So we're going to be running out of time here. So you can also trade the news after news releases as well. We do that as well. right, during news trading session. If we get out from our position, or if we're not able to open a position during news release, we will sometimes trade after the news is released. This is sometimes, we might fade the NFP tomorrow. Who knows, right? Typically, I don't like fading it. I like the initial breakout and be done with it. But sometimes we do trade after the news release, okay? All right. I'm going to answer this for you because we are running out of time here. But all news can be divided into two categories. There are the hot unexpected news and the periodical news. What type of orders is most often used in news trading? Typically, the one that's actually used a lot more are the stop orders during news trading, okay? What types of pending orders do you know? Right, by now, you should know about the full pending orders, the stop, buy stop, sell stop, the buy limit, and the sell limit. These are going to be your pending orders, okay? So this is again the code, non-farm 2024. You can use the code. I'm not sure if it's still usable, but give it a go. Typically from previous years, we just changed the year there. It's non-farm 2024, so we're in 2025. Maybe you can try non-farm 2025. Maybe that new code is activated. If this one doesn't work, please use non-farm 2025. But yeah, hopefully I'll get the new code before the next week's session. That way we can have it for everyone attending the news trading session this month, okay? All right, finally, any last minute questions that we have? What is the best ways of using news to play swing or position trading? What are the pros and cons of using news for swing and position trading? If you understand fundamental analysis, it is actually very powerful. But if you don't understand fundamental analysis, or you didn't have that grasp on fundamental analysis, then it's not going to be that useful, okay? You need to be really cautious in terms of using news trading into position trading, because what we want to read here is not really the short-term impact. For position traders, we want to plan ahead 3 to 6 months. Basically, that's the fundamental delay that we have, right? Let's say if an inflation data is released now, or an interest rate cut is done today, it doesn't have impact into the market. It doesn't have a visible, measurable impact into the market for at least 3 months. Okay, so that's what we call the fundamental delay. So can you use it? If you understand the whole thing, if you get the whole picture, then yeah, any news releases are going to be useful for you for your long-term trades. For example, identifying when or how many rate cuts to happen, or whether or not there's going to be more rate hikes from Bank of Japan, for example. Those are fundamental news, right? But what are we looking at here, right? For example, Bank of Japan. We're not looking or anticipating just that rate cut, because Bank of Japan is waiting for data from their wages to improve before hiking interest rates. So we want to focus on their wages numbers. It's not the unemployment rate, but it's really on how much people are getting paid there. So if you understand the whole thing, yeah, I think it's powerful. But for swing positions, you need to understand the much bigger picture, okay? Thanks a lot. New things today, which will give me good benefit in news trading, but still I'm bothered about stop losses, how to get out quickly. Just make sure you plan out the risk. And the best way I can tell you here is that if you get your position sizing right, you shouldn't be afraid of a stop loss, okay? Because losing is part of trading. It's not fair if you trade and you only say, oh, I'm just looking forward to the profits. No, at the same time, you could actually be getting your losses. So losses and being profitable is part of trading. You can't get away from one of them, okay? So I think one way to kind of minimize that fear is to make sure you get the right position size. That way, when the market is moving against you, if you get it right, it shouldn't have a huge impact on your equity, okay? So make sure you do that first, okay? All right, so what's next? This is a slide, I haven't changed this, but tomorrow is going to be our non-farm payroll trading session. It will be done about this time right now. We'll start at this time where this ends. We are actually going to start an hour later tomorrow because of the daylight savings in the US. But yeah, non-farm payroll tomorrow, huge event. Please do come in early, because I want to talk about what we are anticipating there tomorrow. What are the couple of scenarios that could actually happen, and obviously we're going to be trading that live as well. So yeah, looking forward to that. And thanks for joining in. I think this is going to be a great 2025. So yeah, if you're new here, never joined our trading sessions before, It's going to be a lot of fun tomorrow. A lot of things to learn as well, especially for new traders trying to get a grasp on fundamentals. I use these sessions to talk about what we anticipate, what is the whole bigger picture, and that kind of stuff. Okay. All right, guys, let's wrap it up for tonight. Good luck with your trades. Again, the U.S. market's actually closed today. So yeah, I expect the market to maybe kind of slow down a little bit. I don't expect a lot of changes in the Forex market. I think the volatility is still going to be the same. But if you're trading the stock market, the US 30, for example, the futures market is actually going to be closed. So yeah, just keep an eye out, okay? All right, guys, I'll see you tomorrow. Have fun. Stay safe.